So hello everyone. So some changes in company audit that we need to discuss. Some amendments in company audit. The changes are minor, so that is why I am providing you a separate video. Hardly you have to give me 15 minutes. Just 15 minutes and all the changes will be done, right? One of the changes is there are two amendments in the definition part. One is the definition of government company and another is the definition of small company. Another amendment, the reporting requirement has been enhanced. Section 143 subsection 3, matters to be included in the auditor's report, read with rule 11. The reporting requirements given there has been enhanced. So there are a few more reporting requirements. Apart from this, there is also change in the penalty part, but that has already been taken care of. So when you have seen the remaining videos, the penalty part has already been taken care of. We have already covered the amended penalties, so that I'm not going to discuss here. But the two definitions and at the same time additional reporting requirement, right? Additional reporting requirement. These are the two additions that you need to remember in this chapter. So talking about the definition part, some basic definitions have been provided in the chapter, right? In the first page of your chapter. Basic definitions needed for company audit. Section 2, clause 45, the definition of government company is given. So now if we talk about the definition of government company, what does a government company means? As the name suggests, government company means a company where majority of the paid up share capital is held by the government. What do you mean by majority here? By majority, we mean 51% of the paid up share capital. How much? 51% of the paid up share capital. And which government? Since they are silent, they have only used the word government. It can be central government, it can be state government. It may happen that 51% of the paid up share capital is held entirely by the central government or held entirely by the state government or partially by the state government and partially by the central government. So such a company is a government company. And also subsidiary of a government company is a government company. Right? Also subsidiary of a government company is a government company. Now, one explanation that has been added that was not there before. For the purpose of this clause, the paid up share capital shall be constituted as total voting power where shares with differential voting rights have been issued. So if company has issued shares with differential voting rights, the paid up share capital shall be constituted as total voting power. Right? I believe that is clear. So that's a small change. Another is in the definition of small company. So if you talk about small company means a company other than a public company. So basically a private company is a small company. A public company cannot be a small company, right? A public company cannot be a small company. Paid up share capital of which does not exceed 50 lakh rupees. Now this 50 lakh rupees has been enhanced to 2 crore rupees. So paid up share capital of which does not exceed 2 crore rupees. ठीक है ना? Or such higher amount as may be prescribed, which shall not be less than 10 crore. You can ignore this part. This is not relevant for you. What you need to remember is small company means a company other than a public company. Paid up share capital does not exceed 2 CR. Or turnover does not exceed. Now here 2 CR becomes 10 CR. So turnover of which as per the profit and loss account for the immediately preceding financial year does not exceed 10 CR. So these two conditions must be fulfilled. Apart from that, what is given? Provided that. So a proviso has been inserted. Provided that nothing in this clause shall apply to a holding company or a subsidiary company. Company registered under section 8 or a company or a body corporate governed by any special act. What does it mean? A holding company, a subsidiary company, this clause is not applicable, means any holding company or any subsidiary company cannot be a section 8 company. Cannot be a small company. A company registered under section 8, that is non-profitable organizations, NPOs, they can never be small companies. And a company or body corporate governed by any special act. So any company that is governed under a special act, LIC, they cannot be small companies because they are registered under separate act. A holding company, that is a holding company, that is big, it has many subsidiaries, it cannot be small. Subsidiary has the support of the holding, it cannot be small. Not for profit organizations, so those are big organizations doing charity works, cannot be small. So that is why they are exempted from this category. Apart from this, what you need to remember is the additional reporting requirements given in section 143 subsection 3. Now you see, section 143 subsection 3, the additional reporting requirement, that is the auditor shall report under section 143. whether remuneration has been paid to directors as per the limit given in section 197. If you remember section 197, directors, CA final law, we study the limits of managerial remuneration that can be given based on the net profits. So as per section 143 subsection 3, the auditor needs to report whether the managerial remuneration has been paid in accordance with section 197. So that is a additional reporting requirement. So the reporting will look like, in our opinion, the managerial remuneration to the company for the year so and so has been provided to its directors in accordance with the provisions of section 197 Redwood Schedule 5. This is how the reporting is going to be done. Another important implication and another important change, Rule 11 of Companies Audit and Auditor Rules. If we talk about Rule 11 of Companies Audit and Auditor Rules, there were three matters prescribed about which the reporting was to be done. That is, one was delay in transfer to Investor Education Protection Fund. The auditor should include in his report whether there has been any delay in transferring amounts required to be transferred to IEPF. Another was pending litigation. Auditor should report whether the company has disclosed about all the pending litigations and the financial implication upon it. Third is provision for losses. That whether the company has made any provision for foreseeable losses in the future. Let us say company has entered into a long-term contract or company has entered into a derivative contract. For that, the company may be required to incur a loss in the future. So whether the company has made provision for the same. These three matters were there from before, given in Rule 11. Apart from that, now there are three new points that are inserted. Point number 4, point number 5, point number 6. Point number 4, point number 5 and point number 6. First, let us discuss point number 5 and point number 6, as point number 4 requires a bit of detailing. Right. Point number 5, compliance with section 123. The auditor simply needs to report that if the dividend has been declared or paid, whether section 123 has been complied with. So in the dividend chapter, we study that whenever dividend is declared or paid, there are legal requirements given in section 123 which needs to be complied with. For example, sources of dividend and various kind of conditions like the mode of dividend. So the auditor needs to report whether dividend declared or paid is in compliance with section 123 of the Companies Act. Another additional reporting matter, relevant accounting software. In respect of financial years commencing on or after the 1st April 2022, the auditor needs to report that if the companies are using accounting softwares for maintaining books of accounts. Now you see, in the modern scenario, most of the companies are using accounting softwares for maintaining books of accounts. Every listed company is using accounting software for maintaining books of accounts. Now those accounting softwares must have a feature of recording audit trail, right? That is different kind of transactions. It should have the feature of recording different kind of transactions, recording audit trail, edit log facility, and the same cannot be edited. For example, all the purchase, all the sales, every kind of transactions the accounting software is capturing, and that cannot be altered manually. And accordingly, the configuration has been set in the software that the features of the software cannot be tampered with. That is the requirement. So the auditor needs to report whether the company in respect of financial years commencing on or after the 1st April 2022 has used such kind of accounting software for maintaining books of accounts which has that proper audit trail facility where the details cannot be altered. This is what the auditor needs to report. And point number 4, management representation. Now the language given in the notes is a bit technical, right? The language given in the notes is technical. What you need to remember is that, see, there is a requirement that the auditor is required to take a management representation from the management. The auditor is required to take a representation from the management that they have properly disclosed all the loans and advances they have given, all the guarantees they have issued, all the investments they have made in their notes to accounts. So what the auditor does is, he obtains a representation from the management that, boss, we have disclosed all the loans, all the advances, all the investments, all the guarantees issued in the notes to accounts. And apart from that, there are no disclosures, there are no guarantees. We have not omitted any material disclosures, any material advances, any material loans, any material investments, any material guarantees. We have disclosed everything. Similarly, we have given a proper disclosure in the notes to accounts regarding all the various kinds of funds we have received. Now the auditor needs to report whether he has obtained the management representation with respect to the same. Now this sounds interesting. The auditor needs to report whether he has obtained management representation with respect to the same. right? So the requirement is you need to obtain representation about this. But now the reporting requirement has been inserted that the auditor also needs to report whether he has obtained representation from the management regarding that. That, you know, all the loans given, all the advances given, all the investments made, all the guarantees issued, whether proper disclosure is given in the notes to accounts, and apart from those disclosed in the notes to account, there are no other loans, there are no other advances, there are no other investments, no other guarantees. And similarly about the funds received, and the auditor needs to report about the same. The auditor needs to report about the same. And at the same time, the auditor also needs to report that he has applied all the audit procedures. He has applied all the audit procedures to check and verify that the representation given by the management is not materially misstated. Yani he is also going to report that, boss, I have obtained the management representation regarding this matters, and at the same time he is also going to report that I have applied all my audit procedures, and according to my opinion, the representation given is not misstated. There are no material misstatements. So that is something the auditor is required to report. So these are the additional reporting requirements. So as per section 143 subsection 3, we have studied all the reporting requirements earlier as well. And apart from that, in rule 11, now there are 6 reporting requirements, right? Delay in transfer to IEPF, pending litigation, provision for losses, management representation, then compliance with section 123, relevant accounting software. And apart from that, in section 143 subsection 3, again there is additional reporting requirement regarding the manager remuneration thing. So that is again something that you need to remember. Clear? So these are some of the amendments that has come in the chapter of company audit.